morning, you're with us here on Business Today. I'm Abha, Bakaya. Let's get you all the market opening action. First, a look at what's hot in the corporate and financial world this morning. The tech sell-off deepens on Wall Street, even as December jobs data adds to investor woes in the US. Data showed unexpectedly low job openings in December, and it was also the worst January for corporate job cuts since 2009. Bitcoin below the $65,000 mark, erasing all gains since Trump's election 15 months ago. Jitters on Dalal Street, a stock slump in opening trade in Asian markets. South Korea's regulator briefly halts trade after the Kospi index plunges 5%. Tech sector in focus again as fears persist about AI tools hitting business development and legal companies. Another day, another rout in precious metals. Silver slips below $70 for the first time in 7 weeks. Gold loses some of its luster after rallying earlier this week. Crude oil is also down right now after Iran and the US agreed to talks to cool tensions in West Asia. In under an hour from now, RBI Governor Sanjay Malhotra will announce a decision on interest rates. A rate cut could add momentum to the budget's growth stance and the recent trade deals with the EU and US. Polls forecast the RBI keeping interest rates on hold at 5.25%. First signs that India could be shifting away from Russian crude oil. Reports say Reliance has bought 2 million barrels of Venezuelan crude. This will be its first purchase from the South American nation in a year. Reliance has been one of the biggest buyers of Russian oil in the past years. Okay, let's take a look at your screen. Rupee continues to strengthen. Opening trade today stronger by 7 paise at 90.28. Remember, we were looking at breaching 92 at one point, but the rupee now coming back into force and at 90.28 to the US dollar this morning. Meanwhile, silver has fallen by 13,000 rupees. Silver is now at 2,30,000 per kilo on the MCX, and gold has fallen by about 1850 per 10 grams. So that's also a slide on gold. Coming in, remember, we've entered a risk-off trade and also been seeing somewhat of a recalibration of those precious metal prices. So that's what we're seeing on silver and gold. Crude is also trending soft, and the rupee this morning is continuing to strengthen further after all the clarity on the export front as well. We're joined by Shailendra Bhatnagar and Mayuresh Joshi this morning. Good morning, both of you. Shail, let me get a quick look at the tech setup, and then I'll bring in Mayuresh on the larger picture.
Good morning, Abha. A warm welcome to all our viewers. It's the RBI credit policy. The first 1 hour of trade will be absolutely flat. We look at the view on the interest rates and then possibly take a view. Remember, if they are put at hold, the PSU banking setup should show signs of strength because now it's pretty much sure that there are no more interest rate cuts in the pipeline, and that will help the PSU banking balance sheet. So that's one trade. We are waiting for metals to soften and buy dips into that. So these are the two trades. Nifty Bank Nifty flat. All
right. Mayuresh, good morning. Are we expecting much from the RBI meet today? Is that the area of focus? Are you keeping your eye on the tech route? We seem to have been steady, but the Kospi this morning is seeing a full-on sell-off post all those Wall Street woes.
Morning, Abha. Morning, Shell. Now, again, I think the tech route continues, and the new version that Anthropic has released is creating jitters in the tech market and deep tech in particular. So I think a lot of IT companies across the globe need to realign their business models quite significantly, both in terms of adoption of new tech, deep tech, AI, as well as ensuring that the adoption happens faster than later. From an RBI policy perspective, I think the large expectations is largely a neutral policy, but the commentary will be awaited from the government.
All right. Watching out for that. Just a short while to go there. Now, the US President Donald Trump has launched a new scheme to tackle the sky-high prices of prescription drugs in America. A new website TrumpRx.gov went online at 5:30 this morning. It's a new direct-to-consumer website promising steep discounts for cash-paying consumers, with Trump saying that Americans will save a lot of money and be healthy. 16 major drug makers, including Eli Lilly, Novo Nordisk, have struck most favored nation deals, cutting prices in exchange for tariff exemptions. That includes slashing the cost of popular GLP-1 weight loss drugs to as low as $149 a month. That's a dramatic drop in a country where patients often pay triple of global prices. But questions do remain over who truly benefits, as savings may not count toward insurance deductibles, raising doubts about how affordable TrumpRx will be for insured Americans.
Dozens of the most commonly used prescription drugs will be available at dramatic discounts for all consumers throughout a new website. It's called TrumpRx.gov. That's TrumpRx.gov. This launch represents the largest reduction in prescription drug prices in history by many, many times. And it's not even close. You're going to see numbers that you're not going to believe. Americans have long been paying the highest drug prices anywhere in the world, while other countries often paid pennies on the dollar for the exact same drugs. We're taking the lowest price paid for drugs. We will pay equal to whatever the lowest price anywhere in the world. That's the price that you're going to be paying. It's a tremendous reduction.
All right. Lots of earnings, Mayuresh. Let me come to you on that. We've got a whole host of companies and even index heavyweights reporting, from Bharti to Hero to Tata Motors. What would you like to focus on this morning? Where do you feel perhaps some element of a positive surprise will be coming in for the markets?
Probably in line, and expectations from the chairman's comments at Davos that there might be further ARPU increases happening in this calendar year itself makes us believe that the free cash flows might actually improve. Hero MotoCorp at the same time, I think stable numbers as far as volume growth is concerned. Obviously, the EV launches that competitors are probably doing will keep its EV platform Vida in check, but I think they've got good products out there as well. Tata Motors' weak set of numbers expected, and if you probably look at a few of their slides, including the China market, it still looks very, very tight as we speak. Negative cash flow still projected for the better part of FY26. So I'll watch out for Bharti and Hero.
Okay, I'm just looking at Nykaa's number. GMV is at a record high. Revenues have increased substantially. They're saying that the beauty vertical delivered its largest quarter till date. So it's still the core vertical, not so much fashion, etc., catching up. But fantastic growth coming in for the counter. Net profit up up to 66.3 crores from 26 crores. That's the year-on-year figure. That's a 26.7% increase in revenue, and margins expanding to 8% from 6.2%. Let's talk about this one. Mayuresh, just opening bell already 2.5% higher in pre-open.
Oh, fantastic set of numbers. I think the beauty GMV was excellent. The overall EBITDA margins at a record high at 8%. Nykaa Fashion's profitability showing sequential improvement as well. House of Nykaa in particular, I think the GMV on an annualized run rate around 3,500. And what these metrics actually are displaying is that the fixed asset turns, Abha, has moved to 10.1. Working capital days have come down to 30 odd, which has led to a significant improvement in ROCs at 19%. So great set of numbers, and if they continue on this front, specifically, I think improving profitability in the fashion segment, plus the marquee brands that they're probably adding to, including Nike, which they're probably added up in their portfolio. I think that's a huge positive. So I think the positive momentum might actually continue for that.
Absolutely. Let's take a look at your screens. We've got the markets opening just marginally lower this morning. Just a flat 25604 on the screen. Let's take a look at some of the gainers and losers today. What's making moves on the index? Get a sense of where we're at. Most of the key indices are flat right now. So Nifty Bank and Financial Services, not much of a move. Bajaj Fin is up, Kotak Mahindra Bank and FinServ. So some of the gainers there. Moderate moves right now on the index. Power Grid, Asian Paints following through. Bharti post earnings just marginally in the green over there. Let's take a look at the losers. NTPC, ONGC. So we're looking at energy, metals, Tata Steel, IT, as well, of course. TCS, Tata Consumer, the entire Tata pack actually on the downside this morning. And that's where the pressure is coming in from. BEL, some of those defense names. So the trends are pretty much clear. So Mayuresh, I think one could call this perhaps a little bit of a mix of profit booking as well as other fundamental factors, because the pressure clearly is on some of the areas that we've also seen a very good run up in.
No, absolutely no two ways about it. I think IT is definitely under pressure. What you're probably seeing overnight in the US markets will lead to some element of profit booking as far as the overall hard metals or the commodity space is concerned. And obviously, precious metals are taking a beating. You look at where Bitcoin has landed up last night. So I think the fears are probably getting spread out as we speak in terms of macro disruptions that might actually take place across the world.
True. Shell, let me bring you in. And by the way, FSN e-commerce now up 3.5% on those numbers. I'm always, sort of supporting some of these new age counters that are managing to surprise markets. So it's looking good there. Shell, what's looking good to you this morning? Kane's Tech post earnings is actually down 4-5%. So just tracking earnings reactions there. That's one on your screen. That's down about 4%. Over to you, Shell.
Abha, what I'm looking at is specific performances in the broader older economy. Look at Power India, earlier known as Hitachi Energy, 10% higher. It's sort of screaming up with a lot of gains on very heavy volumes. You have gains coming into Sai Life. This is amongst the highest weighted stocks in mid-cap portfolio. So that is below 200-day DMA, doing pretty well, 4.5% higher. Nykaa, you've already mentioned. I'm also looking at a weak advanced decline ratio, 700 stocks in the green, 1400 in the red. And I'm also a bit worried about how these banks are shaping up in early trade. But give it an hour. Mostly the market will be scattered, looking at individual earnings performances rather than a broad view. So that's what we are looking at so far in the first 10 minutes of trade.
Okay. Mayuresh, talking about the RBI meet then, let's get your expectations. I know you said commentary will be important, but, banks have been waiting for some kind of a breakout and we've still just been holding fort at this point of time. Most of the big triggers are behind us. We've had the budget, we've got the trade deal. Not too sure what cues they could potentially be waiting for next. If we are watching out for commentary from the RBI, what should we be hearing today?
So I think it will be more growth supportive, Abha, and like it has been in the previous instances as well, even if it turns out to be a neutral policy, which the street is probably penciling in. Commentary related to liquidity, commentary related to how RBI will support growth are going to be extremely critical. Lest not forget what the budget announcements have also done. There is some element of a committee being formed in terms of banking reforms. So are we looking at some serious perspective or an introspection when it happens to PSU banks divestment in general, and any developments or cues on that front from the RBI will be most welcome. And if that probably happens in terms of a regulatory roadmap, both from the regulator as well as the authentication that comes in from the central government as well, I think the roadmap in terms of more foreign investments and divestments in PSU banks will be a huge positive. Most of the earnings have been pretty strong and stable as we speak. And with the additional capital expenditure pegged in the budget, the financial system will hold a significant amount of a key backbone support in terms of supporting this growth. So selectively leadership stocks where ratings rankings are strong from the BFSI space, in my opinion, should continue to.
So talking about divestment, what about IDBI Bank? I mean, that's being taken as a pretty much sure shot done deal. What do you think? Has the stock's also been running up, of course, even just this week, we've seen a good move coming in on the counter.
So again, I think it's been to and fro, right, over the last few quarters and years. And therefore, I think this development, the announcement again, I think is going to be critical on what happens in terms of banking reforms. And therefore, I think when a definitive proposal comes through with definite regulations, with definite procedures, I think the divestment process will become far more easier. Both from a regulatory perspective as well as an investor perspective. So once that clarity comes, in my opinion, which it should, looking at how the macro developments are happening, I think divestment in IDBI Bank can probably take place in this calendar year, and it then leaves open a large part of the space for consolidation as well as divestments within the PSU units.
Okay, fantastic. Let's talk about the broader markets as well. Mayuresh, we've been so focused on the index, we've been focused on earnings and the overall sentiment turning around, momentum coming back. When do we expect to start to see the broader markets pick up? Because I think the retail investors still waiting for some kind of a deeper move in the markets.
You're absolutely right. And therefore, I think the markets might actually consolidate over the next few months based on a large part of how the macro moves will now happen. You've obviously got the trade deal behind us, and therefore, a large part of the market overhang when it comes to the US trade deal is largely done with. The EU FTA should start coming through in FY27 as all the paperwork gets over. And we are also hearing on some element of an FTA happening with the Gulf nations as well. So for export-oriented sectors, ex-services, I think this is a huge positive as we enter FY27. For the broader markets, with the macros that we are in at this juncture, the nominal GDP has been pegged at 10% for the next financial year. In my belief, looking at how inflation is playing out in the Indian context, an assumption of corporate earnings growing at 12% as a base case, nominal GDP should grow at 11%, in my opinion. And therefore, a conservative stance taken by the government is a huge positive. As Q1 comes in and as numbers start getting delivered on the expectations that one really believes in, as the street foresees and forecasts, and if it is better than what the street believes in, I think a re-rating is around the corner. And therefore, I think a large part of the FII, FPI, FDI pool, which was showing a large part of outflows, should start coming back. So at some point of time in Q1 of the next financial year, there is some element of recovery expected. And therefore, selectively leadership stock in the broader market, whether it's small caps or mid caps, should do well. So I think FY27, in my opinion, should largely belong to India.
Okay, fantastic. Just recapping some of the key numbers for you this morning. We've had LIC report a really strong set with standalone net profit almost 13,000 crore rupees higher. That's from 11,000 crore in the year ago period, a 17% uptick coming in. Hitachi Energy also profit up 90% to 260 crore. So that's why that one's moving. LIC almost 5% higher in trade today. So a really, really strong move coming in. Hitachi up about 10%. Of course, we've been talking about Nykaa as well. So these are some of the counters that are seeing some amount of a good move on earnings. Let me see if Mazgaon is also moving today. Net profit is up. Margin stood at 24.6 versus 26, so not such a great move on margins. But let's see if the stock is reacting to earnings just marginally. Tata Motors PV also looking a little tight right now. So just let's see how that one's reacting at this point of time. Huge loss, 3,486 crores, of course, post the demerger as well. And this is in comparison to net profit of 5,485 crores a year ago. So Tata Motors PV, but everybody knows the story and how that's playing out, just about flat after reporting those earnings today. Other than that, we're also tracking Hero for you and of course Bharti Airtel as well. And I'll talk you through those earnings, but I'll just look at the reactions for you on your screen. Share a quick look in terms of anything else you're tracking on opening bell.
Well, Abha, a very, very sharp sell-off happening on the IT space. Infosys is the top loser on the index, 2% lower now, contributing a negative 21 points to Nifty. Sell-off happening in HCL Tech. In fact, the Nifty IT index is already 2% lower. Infosys falling for the fourth day in a row, down 2%. This is a price that we've last seen on 19th of November. That's what I'm tracking in early deals. Abha.
Well, IT is something that we'll have to keep our eyes on. Pressure seems heavy. Look at the way the Kospi stumbled this morning. We've still been holding forth somewhat after the first initial knee-jerk reaction on Monday. Pressure is still obvious, down about 2%. We'll have to keep an eye on it and see how this pans out. But the concerns are real when it comes to what's happening on the AI front and how some of these companies and ways of working will be impacted. We leave it there. We're watching out for the RBI commentary coming up for you in just a short while from now. Do stay tuned. Mayuresh, Shell, thanks so much for joining us this morning. We'll be back with you in a short while. Thanks for watching.